What's up, guys? It's Brian from HASHWAREHUB. It's about 9:30 a.m. Eastern Time, January 20th, 2018. We're coming to you with a brand new Bitcoin trading video. We're only going to be going over Bitcoin. But first, hit the subscribe button, notification bell. Re-steaming and upvotes are all greatly appreciated. You'll see the links down below, not only to our Steam It page, but also to DTube. If you guys are into cryptos, blockchain, anything in this industry at all, you definitely need to be on Steemit and or DTube, and you should totally look at the links down below. It's kind of the future of kind of social networking, blogging, and also YouTube as well. So DTube is an amazing platform. It's rather new, and you guys should definitely check it out if you're involved in cryptos at all. I think you definitely would find it very interesting at the very least. So that's the first thing. The second thing I also want to get into is that I've been failing to mention, but we have a Facebook group called the HashwareHub Crypto Trading Team that we started up not too long ago. So you'll see the link down below for that as well. You just click on it and it'll take you to Facebook. You say join and we'll grant you access there. From there, we like to make a bit more timely type of projections and news and stuff like that. It's also a place for people to go ahead and share trading ideas. So I think the ones that are on it right now have felt that they've gotten some use out of it, and we're looking to expand that out quite greatly. What we're doing on it right now is the least of what we have planned to do. So definitely take a look at that. So let's get right into Bitcoin right here. We're looking at Bitcoin on an hourly basis. This is Bitcoin US dollar. And I've had a lot of these lines drawn in here for quite some time. And one of the reasons why I do it is because of the fact that even if a pattern has passed, it's still in effect. When I say it's still in effect, it's in effect in the manner that more times than not, price will come back to a part of that chart pattern that is a critical part. And I'm going to talk to that here in just a second. But first, let's go ahead and let's kind of clean up this hornet's nest of lines of support and resistance lines. And if you look at our last videos, we were talking about particularly about what's going on right here. We had this head and shoulders pattern, and with the neckline, it's kind of a little difficult to see, but the neckline is this line right here. And it looks like we've gone ahead and decisively broken through it. So I'm going to go ahead and I'm going to delete this line. I'm going to delete this line that measured to the neckline, and then this, based on a head and shoulders pattern, this right here, the top right here, is basically if the head and shoulders pattern is truly going to play out, this is the minimum target, somewhere around 14,150, which tends to be another place of an enormous amount of resistance. Okay, so it's something to go ahead and obviously keep in mind, this level. So that's the first thing we're going to delete. What we're also going to delete is this trend, this sideways trend line, okay, right here, which we had thought possibly may have been a bearish flag, but it looks like it's more of a sideways consolidation line. And what you're going to see here is that the price broke through it, and then it tended to come back down to take a look to, to continue this where basically support becomes, resistance now becomes support. And there's two lines here. There's this bluish line and there's this yellowish line, and pretty much the top of the trend here can be drawn like anywhere between these two. And that's exactly where the market kind of came back down and tested that. So we're going to go ahead and we're going to delete this. Okay, we're also going to delete this right here. And this line right here was a line that we had drawn for a bottom of a triangle as a resistance line. And we could see here that the market came back down underneath it, and then it went back up, and then it literally skated right along this line. Okay? And then moves up. So one of the things I want to mention is that a lot of times it's not one clear pattern. It's actually a combination of patterns. And that's the powerful thing about technical analysis. And I think that's one of the things that a lot of people don't mention, is that it's a lot of times it's not just one pattern. It's a combination of patterns. So you have to draw all of them. And I know it becomes messy, but you know, the market's not as simple as just showing one pattern. If it was, then it'd be a lot easier to trade. And then if it was a lot easier to trade, then the market's going to change instantaneously to some other pattern or some other trading scheme in order and then people are then going to have to figure out what that is. So that's the way I like to mark up trades. I like mark up not only trades but also charts, is that I like to show a lot of patterns at one time. And it's not the fact that I'm indecisive or that I'm at an indecision point. It's the fact that the market is exhibiting a lot of different patterns. And you can't just say, oh, the market is X pattern or Y pattern, right? Because if you do, you're going to fail a lot. And so that's why we go ahead and put a lot of these lines on here. And you're going to see that as we make more and more videos. This was another support line that we had gone ahead and drew in as well. And you could see how the market came down specifically to this line was specifically drawn on these 2 points right here, and you can see how the market came down right to it, and then it bounced right off of it. But we're gonna go ahead and we're gonna delete this too. So we cleaned this up quite a bit. And what are we left with? Okay, we're left with what we had originally drawn a long time ago, this ABC correction, where we thought the price of the market was going to come down somewhere around this level, $8,000 level. And then part of that is this, you know, this 1, 2, 3, 4, 5 wave that we went ahead to see if that the correction, this correction of this wave was actually over. And we were saying that, well, it may not potentially be over just yet. We're going to get to that in just a second. So the next thing that we have here is this descending wedge. This descending wedge is drawn specifically from this point and this point and this point and this point. Okay? What we're still leaving in is this wedge that we had originally a long time ago. And why did we leave it in? Because, like I said before, sometimes the market exhibits many different patterns at the same time, and you need to leave them in. So what are we seeing right now? Okay, I'm gonna just take this one and just move it off. How about this one? Yeah, we're gonna move this one off too. Okay, so this descending wedge, A, B, C, D, E, is what we would like to see. Okay, maybe this is a little bit easier to see. A, B, C, D, E. Okay, that's nothing new. You guys have seen us do this many times before. But if the market is truly in a recovery, then a market recovers based on Elliott wave theory in what's called a motive wave. It's a motive wave is basically just a fancy name of just saying it's a recovery. That motive wave brings you in a new direction. It's an accelerated wave. It's a wave that says, okay, correction's over, now we're going in this direction. And it has to be done, a motive wave has to be done in 5 waves. Has to be. It's not a 3-wave scenario. It's a 5-wave scenario. The A, B, C, D, E are all 3 waves. Okay, that's as per Elliott wave theory. So if these are all 3 waves, then the 5 wave has to be longer than a 3 wave. Just common sense, right? So where does a 5-wave bring us? A 5-wave brings us, I'd imagine that this is 1. Let me zoom in here. I'd imagine that this is 1, 2, 3, 4, and 5. That's the way in which I measure it. So, what do we see? Aha. We see that 3 and 4 approximate in 2 places. First of all, on the top of this descending wedge, and also at the apex level, price level, of that previous wedge that we had drawn. Aha. So what this does is this heightens the importance of this level. It greatly heightens it. So not only is it the top of the wedge, it's also the point of this triangle that we had also drawn a long time ago. Another thing is that if you look right here, okay, there is a ton in this range right here. There is a ton of support and resistance. Ton. And it's going to act as resistance as we try to break through it. Okay? So the market's going to have to do a lot of work to get to here. A lot of work. So there has to be a lot of bulls in order for that to happen. A ton. So we have this, ton of support and resistance, which really is just going to be resistance as the market comes up. And then if this is truly a bottom, if we made a bottom, this wave here has to be in 5 waves. So when we get to this point, if we get to this point, what we're going to have to see is that the market then makes a higher high. And then if that's the case, then this wedge is probably over. Now there's other ways to go ahead and draw this top line, but I believe that this is my primary line. Okay, the secondary line is not using this one up here, but having this be more of an acute angle. I don't like that. That's more of my secondary line. And one of the reasons why it's a secondary line is because we had also drawn this wedge right here, and this top line is also the same line of this wedge. And it's a stronger line because of that, because it has it in common. So if the market makes it up here, we're going to be looking for a 3 and a 4. But it's going to be very difficult to tell if this is a 3 and a 4 or if this is really just a D. If this is just the D, and then we're just making, a 1, 2, 3. In other words, an ABC down. So a lot of, the D really should be here, but I just have it over here so it's not a big mess or not a bigger mess. So if the market comes down to this E level, then it's getting closer to kind of this level that we would like the market to get down to. Now, I got a lot of flack for saying that the market's going to come down to 7,000. A ton of flack. A lot of people being very sarcastic in it. Saying things to the effect of, "Oh, look at me. I made a lower low, therefore I know more than everybody else, and listen to me. I'm a better technical analysis." Okay, great. I really don't care, but that's the way I see it. That's the way I count it, and some of the largest hedge fund managers and portfolio managers that I've studied under, that I worked under directly, would count it the same way. So if the market makes an E, we would consider this a much healthier correction. Because for a healthy correction, what do we like to see? We like to see there are no more sellers. We don't want any more sellers anymore. And then that's when the market really just rockets up. And I promise you, the big money is waiting for this. They're waiting for this. Yeah, they bought a little here, they bought a little here. They're waiting for this to run up here. Maybe they'll generate some cash right here. Okay, and they'll look for this thing to come back down, and they'll be buying here, 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 here. Okay, that's how they're going to ladder in. Notice I said they're also going to be buying in these levels down here. So basically what I just showed was the way in which big money ladders in. And you should trade like big money. How do you make small money big money? Just like that. So let's also go ahead and take a look at the algos and see what's going on there. All right, so we're looking at Bitcoin. This is Poloniex and Poloniex data. This is a 4-hour basis. Okay, on a 4-hour basis, the trend strength indicator ticked up right here, but the sign indicator was at a high. Okay, so these are one of the things we like to see. The sign indicator was at a high, indicating that the market was going to come down, right? But the market kind of had a very small, very, very small correction here on a 4-hour basis. It didn't like wave down, right? So this tells me that there's a lot of buyers in the market. A ton of buyers in the market. What also tells me that there's a ton of buyers in the market is that look at this D trend indicator. Okay, it bottomed right here, and then it's going straight up. And the place in which it broke through this trend line. I don't know if you remember, we had drawn this trend line some time ago on based on these points and these points here. It broke right through this trend line, the D trend on the D trend indicator. Right here, it came back down, it like tested it, and then it came back up again, the sign indicator. You know, MACD crossed over right here. Okay, another bullish sentiment on a 4-hour basis. You know, this crossed over the same time the trend strength indicator crossed over. And the market continued up, and you see the trend continued up. We like to see that. It's very bullish. Now, if you look very closely on the sign indicator, you can see that the leads, the lead of the sign indicator, the purple line, crossed below the blue line. And then what did it do again? Then with another bar or two, it then crossed right back above it. So it's saying that it sees a lot of bullish sentiment on a 4-hour basis. Also, the trend indicator, the trend strength indicator, okay, it's now fully bullish. We have to wait for this last 4-hour candle to go ahead and close out, assuming that the 4-hour candle doesn't come down. But in order to actually measure this as basically locked in, but you know, there's a good chance that this thing is going to be in very bullish territory, either this candle or maybe the next candle. What we also see is the hidden support lines are coming in. The hidden support lines came in two bars ago. So super bullish on the 4-hour basis. And I think our video, last Bitcoin video, or maybe the Bitcoin video before that, we had mentioned that this had crossed over. So let's go ahead and take a look on the daily basis to see what's going on. All right. So this is daily bars. And I think it was a video before or 2 videos ago, we had said that the trend strength indicator crossed up to bullish territory on a daily basis. That's a big thing. Okay, we have the trend on D trend has also it's just looking to cross this trend line of D trend. So this is bullish. This is bullish. MACD is still negative though. MACD is still negative in the sense that it has the lead of the MACD has not gone ahead and crossed over the follow, but that can happen very quickly where it turns around. Not only that, we then have the sign indicator is at a bottom, and possibly the lead will soon go ahead and cross over, cross above the follow, the trailing line on the sign indicator. So on a daily basis, very bullish. Very, very bullish. Not as bullish as on the 4-hour basis, but it's still bullish nonetheless. In particular, what makes it bullish is the fact that we have the trend strength indicator turning positive. Okay, now where the critical portion of this happens is we have to see what's going on if the market makes it up to the top of that wedge that I had mentioned before on the other charts. And that's where we're then going to go ahead and have to take a look at what's going on with these indicators specifically at that point. So we're going to leave it there. This video went on very long. So hope everybody made it to the end. If they did, then clearly you're going to have the advantage of what's going on with these algos right here. And yeah, we're going to end it there. So happy trading, and we'll be speaking to you guys soon.